Good morning, everybody. It's Tuesday, July 6th. Hope everyone had a great July long weekend if you celebrated it. Anyways, here's the morning Kitco chart. We saw on Sunday night gold kind of traded sideways and then it drifted up into the night. And yesterday we saw gold pretty much carry through and it just drifted down and then somewhat sideways for the rest of the day. This morning we're seeing gold move up pretty much right into the resistance from on Sunday, and now we're starting to head back down. If we take a look at the intraday chart, this is actually the daily chart. What I'm kind of looking at on the daily chart, I'm hoping we're going to get a pullback possibly to the 1150. We might even get a pullback to the 1170 area. And what I'm seeing here is, I'll show you on the intraday chart in a moment, but we had a nice downdraft on very big selling volume. Now we're getting this tiny little flag up, and usually a flag marks the halfway point. So just a quick visual, pretty much the second half of that move is 1170, 1150 area if we get another downdraft. And that would actually start to form a nice big handle, and we could see it trade in that range. If it does that, we're actually kind of potentially open the doors for a shoulder ahead, and it'll come back down and test down here somewhere and then bounce back up. So we could actually have a possible head and shoulders reversal pattern, and we could see gold test quite a bit lower in the next year or so before it actually does a big move higher, which is what I've kind of been thinking for a long time. This topping action, this kind of grind up here of new highs and selling is not very favorable for the long term. So that's what I'm looking at there. Let me pull up the intraday chart. You can pretty much see in a bull market, let me just quickly show. This is pretty obvious, but in a bull market you get these surges and you get drift sideways. And you get surge and a flag and a surge and a flag. You get the stair-stepping pattern. But once the market reverses and heads down, you get the opposite, and usually they're more severe. So you get the spike down, you get the bear flag on light volume. You get the spike down on big volume, you get a bear flag on light volume. So this flag has been more or less drifting up for the past couple of days. It has been the long weekend, so that's why there isn't really any volume the last couple of days. But the price action is favoring another downdraft. So that's what I'm looking for. It looks like it's starting to roll over here today. I was kind of hoping gold was going to drift up into the 1230 area, and I want to, because then it's right into a resistance level and we can actually pick ourselves with a stop and have a nice swing trade to the downside. But instead it's stalling out by the looks of it here with a possible head and shoulders, just a mini one, which would be a shoulder, head and shoulder today. It could be a good opportunity to short it somewhere below this, if it breaks this neckline. And of course, if it breaks this low, we're going to see a quick drop because there's going to be stop orders triggers. If it breaks this low, then there'll be a big flood of sell orders, because a lot of people, I think, have set that as the low. They've gone long gold, and if it breaks that, they want out. So that is going to be what triggers the next leg down. It's going to be a wave of selling. So that's what I see forming on gold. Could be a good play for the more active traders today. Keep your eyes on gold. As for the sp500, pretty much, we're in a downtrend here. And if we take a look, I've got the 5-period moving average. And if we get a close above that today, the futures are trading up above that. A close above the 5-period moving average is a pretty strong sign that the market's going to start moving up. I also have these 8/8 moving averages. One is based on the open, one's based on the close. And when the blue line is under the gray line, it means that the trend is still down, the price action is still bearish. And once they cross up, it's more of a potential swing trade, and we want to try and buy it on a dip once they cross to the upside. So that's what we're looking at right now. Looks like we've got a nice reversal candle this morning for the sp500. We've got a wick that dropped down. Futures dropped last night. I was watching them and they broke the previous day low over here, and I saw a quick surge of sell orders as all the stops got triggered, and of course it was after hours, so the liquidity was very thin, so it dropped pretty quick, but it's rebounded extremely strong. If we just zoom into the 5-minute chart, okay, let me just go to the 10-minute chart here. Pretty much I saw this low break and I saw a flash of sellers. It's not much because it was after market, but if you zoomed in, you can see there was a spike there for it was an increase relevant to the time. Anyways, it sold off, broke those lows, which is what the market does. It'll shake everybody out, one last low, and now it's posted a very strong rally through the night and this morning, and now it's trading up at resistance. And it looks as though the market is trying to actually put in a real bottom here. As much as it looks like it could be a good short, which we might try doing a short today, we could see a nice quick downdraft, and it could come down probably 1% to around the 10-15 area. That could be a good place somewhere in here, but overall I have a feeling that the market is actually trying to post a bottom here. And if I pull up the daily chart, which this is, and I just flip back here, we can see every time we get these gray spikes, this is the panic selling on the SP5 or on the NYSE. Whenever you get these panic selling spikes, usually a couple days later the market rounds out and starts to head up. So if we look at these other ones, you can see a panic spike, and we're in a strong uptrend there, so it continued up pretty quick. So it was a one down day, and then it started up again. We had another panic selling, drifted back up, and then the market started to go more bearish, and the bounces started to fade out, and then the market rolled over. But as we see it, whenever you get these big spikes, usually you get a bounce afterwards. So by looking at these spikes, the market did bounce back, and then we had a spike back in early June, and we posted a nice rally. And as of now, we've had a big spike last week, and the market's trying to bottom out. And of course, there's carry through momentum because we broke the May lows here, and a lot of people around the world were getting out. So it takes quite a few days for that for that selling to kind of dissipate before it rotates and starts to head up. So it looks like this could have been the washout, and we're just going to watch it today. There might be it might just rocket higher, or we could see another sell down. So it's pretty sketchy right now. The market internals are mixed, nothing really bullish or bearish about them. So we're just going to play it by ear. Still favoring the short side right now. The market is trying to wash everybody out, and usually at the end is when you get the big price action. So we'll see some pretty big swings. And let me just pull in the 30-minute chart here. Just looking at the 30-minute chart, we're getting, you can see the volume was relatively, it was still heavy, but light compared to the last couple of days. And of course this type of price action, these spike downs and this big selling, this every time you get these new lows on heavy volume, and it's still heading lower, but it's grinding its way lower. That's the potential that the market's trying to bottom here. So that's what we're looking at right now, and I'll talk to you guys later. Bye bye.